Good morning, Jim. Thanks very much for joining us today.
Good morning, Mark. I'm delighted to be here.
Jim, I want to start off with the subject of bubbles, because Nouriel Roubini says that investors are borrowing dollars to buy assets, fueling huge bubbles that may spark another financial crisis. Are we looking at another financial crisis, Jim, down the line because of these bubbles, as Roubini puts it?
Well, the only bubble I see forming in the Western world is in the United States government bond market. I cannot conceive of lending money to the United States government for 30 years. But other than that, I don't see any bubbles going on. Maybe he knows something the rest of us don't know.
Well, he cites emerging markets, stock markets. He cites commodities. You don't agree we're seeing bubbles in those markets?
Well, it's clear Mr. Roubini hasn't done his homework yet again, because what bubble? I mean, sugar's 70% below its all-time high. Silver's 70% below its all-time high. Coffee's 50% below its all-time high. Cotton is 50% below its. What kind of bubble is that? What's he talking about? I mean, the Shanghai Stock Exchange is down 50% from its all-time high. What kind of bubble is it when nobody's been buying?
It's all relative, isn't it, Jim? Because lead's up 125% this year, copper's up 105% this year, the Brazil stock market's up over 100%, the Peru stock market up over 100%. Looking at it this year, Jim, not relative to where we've been, I mean, is it a bubble?
What kind of looking at anything is looking at this year? That's not a bubble. If something is up 100% this year, but down 70% from its high, that's not a bubble. That's a good year. That's a great year. Maybe it's too high for this year, but that's not a bubble. That's not how you define a bubble.
Okay, Jim, so in that case, does it mean that emerging market, stock markets, that is, have got further to run? And if so, where should we be putting our money?
Well, I don't know any emerging market, quote, stock markets that are so high or so historically high that I would call them a bubble. They're certainly all up a lot, and maybe they're too high. But being too high is not a bubble for anybody who knows financial markets. There's a great difference. I'm not buying any stock markets around the world right now. They've all gone up a lot, and I don't like to buy anything when it's been going straight up for a while. I prefer to buy things when they've been going down. I can't find many things that are going down at the moment.
You've had a long-held view on the dollar. You say, you know, long term it will continue falling, but in the medium term, I gather you've been increasing your dollar holdings in anticipation of a rally, Jim. Can you just elaborate further on this? How long this rally might last? What's going on in your thinking?
Well, Mark, right now everybody, including me, is pessimistic on the U.S. dollar. That usually leads to a rally, and whatever the asset is, I would just suspect it's going to happen again this time. If it goes up, I hope I'm smart enough to sell it somewhere along the line. If the dollar continues to collapse, I'm sure I'll have to panic and dump like everybody else. How long will it last? I have no idea, Mark. It just depends on how the world evolves. Somewhere along the line, whether it's the next quarter, the next year, the next couple of years, I think I'm going to have to sell the rest of my dollars. At least that's my expectation at the moment. Let's
come to China, Jim. As you say, you're not buying Chinese stocks, but I know that you see the currency rising despite its effective peg to the dollar. So when do we think China is going to address this, Jim? Because we know it's been preventing the yuan from appreciating since July 2008. So when's it going to address the currency?
Well, Mark, I'm not sure I'm the person to ask. I would have thought they would have let the currency be convertible by now, freely convertible. They have been making small steps for 4 years now to make the currency more and more convertible. I think China knows that you cannot be a great international economy with a blocked currency. I think they know they're going to have to do something. How long it's going to take, I don't know. I think it's not good for China what they're doing. It's causing, you know, excess liquidity to build up inside the country, which causes lots of price increases unnecessarily. When they're going to do it, I have no idea.
Jim, can China shift from exports to domestic demand? I mean, it's a big shift that's needed. When and if can this happen?
Well, can it happen? Of course it can happen. It is happening at the moment. It's not happening as fast as perhaps it could or should happen, but it is going on right now. I mean, if you go down to southern China, you see they're not selling a whole lot to the retailers in America these days. Many factories have closed, and the people who are buying are basically, they're building infrastructure, they're building agriculture, they're doing things internally in China. Now, that may not be considered consumption as you mean it, but it's certainly internal spending and internal development.
As we said, you made your name in gold. It's hit a record in the last 24 hours or so. An obvious question, Jim, how high is it going to go and how fast?
Mark, you should watch Bloomberg if you want to know how high it's going to go. I don't know. I suspect it's going to go over $2,000 sometimes during the bull market, but depending on what happens in the world, it could go much, much higher. The old high back in 1980, adjusted for inflation, would be over 2,000 now, just to get back to the old high. So it'll certainly get there sometime in the next decade.
Have you been taking part in the recent rally? Have you been adding to your gold holdings?
I own gold. I have not sold any gold. I'm not thinking about selling my gold. If it goes down, I'll buy more. But Mark, if it goes up, if America bombs Iran and it's going up, I'll probably buy more. I'll jump into the panic.
I mean, you mentioned a couple of $1,000 an ounce, Jim. We've heard all sorts of forecasts here on Bloomberg. 2,000, 3,000. John was just telling me that he spoke to a fund manager last night who was talking about 4,000. I mean, is this pie in the sky, Jim, for gold?
Well, look, if the U.S. dollar collapses, then 10,000 is not pie in the sky. It's in worthless U.S. dollars, so it really wouldn't matter what happens. What kind of pie in the sky? I don't have any idea. If people are starting to throw those kind of numbers around, we're probably ready for a correction, or it's overdue for a correction. Anything that's been going straight up for a while usually has a consolidation, so maybe that's what's about to happen.
Jim, you've been
saying... But how high? It will certainly go over $2,000, Mark.
It will certainly go over 2,000. You say if the U.S. currency, if there's a crisis, Jim, you know, gold will surge. And you have said this year there may be a currency crisis within the next year. I mean, do you still stand by that? And which currency could be at the center of that crisis? The pound, the dollar? What do you think?
Well, I'm sure there's going to be a currency crisis or a semi-crisis sometime in the next year or two. We have huge imbalances in the world economy and the world financial system that has always led to currency crisis. I mean, it may sound radical, but this is the way the world has always worked. I don't know where it'll start. It could be the pound sterling. It could be the U.S. dollar. Usually what happens, Mark, is something we're not thinking about, you know, Argentina or Ukraine or who knows what. And then it snowballs, and the next thing you know, you have wild currency gyrations, people making and losing fortunes. Just watch it, learn about currencies for the next couple of years.
Jim, got to get your comment on Warren Buffett. You know, he's made this massive deal in the last 24 hours, and he says it's an all-in wager on the economic future of the United States. Do you share his all-in wager, Jim?
Well, I don't own any railroad stocks in the United States. In fact, I own virtually no stocks in the United States. I'm more worried about the U.S. than Warren is, apparently. I think the future is more in Asia than in the U.S. But I am an American. I do pay American taxes, and I do have American assets.
But he's definitely betting on the future of the U.S., which maybe you're not doing right now.
Well, it's not that the U.S. is going to disappear and fall into the sea or anything. It's just that relatively, Asia is growing much more rapidly, and I think there are more opportunities in other parts of the world than there are the U.S. I don't think anybody would deny that the U.S. is a mature economy, you know, the largest debtor in the history of the world. So I think there are better opportunities elsewhere, that's all.
The Fed meets today, we know that, Jim, to decide on rates. No change forecast, but the question being asked by everyone is, when's it going to raise borrowing costs? When's it going to signal a change in policy? What do you think, Jim? What should the Fed be doing right now?
What should the Fed be doing? They should dissolve and go away and leave the market to take care of the situation. The Fed has added gigantic debts of garbage for all the American taxpayers to have to pay off in the next 10, 20, 30 years. The Fed should leave us alone. The Fed basically follows the market, Mark. I don't pay too much attention to the Fed. I mean, I have to because they're making us deeper and deeper in debt. But no, the market sets interest rates. The Fed just follows. They're just bureaucrats, Mark. They don't know any more than you and I do. They may know more than I do, but certainly not more than most people do.
But, Jim, we're still eager to know when they're going to unwind their stimulus, both from a government perspective and a central bank perspective. That's important, is it, when they start to do that, and at what sort of pace? What do you think?
Well, there's no question that not just the Fed, the entire U.S. government has taken on gigantic obligations here in the last 2 years. Triple, quadruple, quintuple. They don't even know how much they've added to their obligations. And that's going to have to be dealt with down the road. I suspect that in the next year or two, you're going to start seeing more and more problems in the credit markets, the currency markets, and you're going to see all this unwinding, as you put it. The market's going to force an unwinding. It's going to come a time when nobody's left to buy U.S. government bonds.